Good morning, everybody. Just want to make sure I have the right webcam on. What's happening? Happy Monday. Time for a little daily profit plan. Let's go reclaim host. Let me get this out of the way here. All right. So let me get my bearings on the laptop. Let's go screen share. Okay. So we will start here. All right. What's the background? You just see little cliffs, water area. Yeah. Get the chat up here. Okay, very good. All right, let's get some charts. So coming at you live from Jacksonville, right by TPC Sawgrass. I'm jealous that I'm not gonna have a golf window today. You know, first world problem type stuff. All right, what's happening, Tom? Good morning. Hey, Roy, Pete in the house, Greg, Patrick, David. Good, good, good. Yes, yes, yes. Catherine, good morning. Esther, good morning. Still have the Feb 9th, 45.50. Okay, good. If you're in engineered options, I'm assuming that's what you're talking about for the Feb 9th, correct? Okay, that is fine. We'll have a look at everything this morning. So we need a couple things. If you're in engineered options, I did close out the stack of trades Friday. We had, let me go XSP here. So Friday, so this is last week's setup. We had a 695, 694, 691, 690, and a 686, 685. So we had three levels. Let me see if I can bring my little drawing tool here. And because I stacked them with contracts, I closed out for a net profit. I basically won two of the setups, lost one. The one loser was very small. The other two partial. But net was 150 bucks, and safely protecting some profit on Friday because of the way that Friday behaved. Are we going to continue up today, or is there any type of stall? I mean, if anything is going to be an efficient day, I would think that today is going to be a bounce back efficiency day. Friday was baffling to me. Not in a bad way outside of I lost the day. I mean, I lost on zero DT, which is always frustrating. But I literally had a $200,000 swing in profit. So I'm not upset about the resurgence in the market. I almost feel like the thrust on Friday and the volume and the 80% of stocks up on Friday, it in a way it kind of like was a one-time save for the market. And so I mean we're still on like pretty fragile ground. The structure is still there to kind of hold tight, in my opinion. But I honestly think we're going to deal with a lot of noise. We're going to see the VIX probably do the same type of thing, which is the VIX goes maybe up to 20, back down to 17, up to 20, back to 17. And I warned, like, that could be how this year kind of plays out until the market's capable of making a bigger decision, which right now it's really not. So taking a look at here's just a cleaner workspace. I mean, you can see that we were on the verge of like, okay, so we're clearing some lows. We come down to the 100-day moving average, and was that the technical sign? Well, it was a big thrust back here. This is the post NVIDIA earnings sell-off candle. That was November 20th, almost eerily similar to what we saw on October 10th, and technically, right at that 100-day moving average. So, I mean, it was a good push. Now today, this is live SPX, so we're down a little bit. If you're still hanging on to engineered options, I'm your biggest cheerleader. I want to see if those will, as we get through the weekend, they're going to open up. Right now, futures is down about 0.24%. Let's do some quick math on the SPX. Because if you're in the XSP trade and you have a 695, 694, 695 is your line in the sand. You want price to be above 695 for that one to be a winner. If you're in the 691, you want it to be in that to be a winner. If you have the 686, same thing. Those are all bull put spreads. Does that make sense? I won that DPP, did not take your last update trade. Yeah, that's good. I mean, that was a like I said, I was silly into the close trying to basically call the top. I did the math. That's what. And again, I accept the risk. And I lost the day. But obviously I know how to get it back. It's like I was mad at myself for the day, but all in all, I mean, the market did what really I wanted, because what I've been experiencing the last couple of weeks is not necessarily like, oh my gosh, my positions are so bad. But what I was experiencing is, look, for Project Options Edge, I have some ratio spreads. So essentially I have some naked puts. And when volatility does something like this, where volatility is running, pretty steady, it's like it's starting to change all of the expected moves, and your asset that looks like, okay, here's where the price is at, the volatility cone or probability cone is now starting to look much wider. And so if you think of what a naked put is in your broker platform, if I don't have any protection on a naked put, even if the asset is up here, here's just a drawing. So let's say this is where prices are trading, okay, way up here, and I sell a naked put, 50% lower for December. Okay. So essentially doing like a leap where I'm going out, 11 months or 12 months, and I'm just going to try to keep that premium, keep that income. I don't really want the assignment, but if price is starting to dip lower, and all of a sudden it starts to accelerate lower, the broker treats this trade like, let's say that this is a, $200 asset and I'm selling a $100 put. Well, the broker treats that trade like I'm risking a $10,000. So there are times when volatility flares up that my, P&L is really awful. But once the VIX retreats and it settles back in, it goes right back in my favor, because everything shifts from the probabilities, the efficiencies, what things are priced to be at, what the expected moves are going to be out that, 10, 11, 12-month window that I'm trading. Does that make sense? So anyway, that's how I had such a big swing. I mean, I wasn't really worried about, like last week, I think I was down 2.2% for the entire week. And then on Friday alone, it's like I have a huge like 2.5% swing in my favor. So I'm going to see prices move like that in my portfolio. Now for just trading, just day trading, just zero DTEs, just weekly trading, we just set up those trades and we try to win the day. Okay. So let's see here. Trisha says, where do I find trailers in portfolio? What service are you referring to, Trisha? Are you brand new to like this session? Do you have a service? The plan this morning is I will be getting some trades out and levels posted for engineered options, and I will get a trade in this morning for waterfall income, and then once we have opening bell, we get in for our daily profit play. So I am thinking that here's kind of the big push last week. We calculated out, if you remember last week, the pre-market move on Friday was 81 points. And it wasn't a glitch. I mean, the market opened on Friday. It was immediately down to like 52 points. It was nowhere near that. So the market even gapped up, and the market ended up going up 111 points on what should have been. We saw pre-market 81, but that was tasty trade. Thinkorswim showed like plus or minus 53 or 54 points. It's clearly way off of that, right? I even measured the gap. I measured the VIX. I think what annoyed me last week, on Friday especially, is that I usually don't get the VIX math wrong, because it's way more difficult to see the market breach the upside. With a VIX up here at 23 and Friday the VIX was down to 17, there's really no mathematical reason for the S&P to go as aggressively as it did. So, but again, I say that, but it happened. So I chalk that up to an outlier type day. I say this all the time in daily profit play. If we are going to take a loss in daily profit play, the market has to do something pretty dumb. So could I have managed profits a little bit differently on Friday? Yes. I mean, if you were with me in my final session, I was staring at an $800 profit trap at the end of the day. That ended up closing for $155. So could it have been differently or ended differently? Sure. We could have mitigated a lot of that risk and kind of washed the day, which obviously would be better. So anyway, it's fine. It's like, it's trading, and zero DT. It's like, you do have to, have some thick skin and dust it off and continue to trade and grind. So I know that when I took a loss on Tuesday and Friday, which is rare, But I over traded. It's like I'm putting on defense trades and I'm trying to put pins on. I'm doing multiple strategies all on SPX. And so I had a lot of trades running. And when the market kind of slips through the cracks and I didn't land a huge profit trap, it is what it is. But I also know that if I give myself those opportunities on a regular basis, I tend to land a few more profit traps, and that's all I need. A couple profit traps if I'm playing those, getting an extra $500 to $1,000 to your day doesn't feel too bad, right? So anyway, Sean says, "What do you think about that push?" I mean, it was ridiculous. I mean, and so when we talked about it live on Friday, I mean, that last push, I mean, especially through like 19 or 20, because again, we go back to the VIX, and let me zoom in on like a 10 minutes. So we're watching this VIX all day, right? I was at least. So when we started the trading day on Friday, and again, this is just a lot of time just recapping what happened on Friday because it was an insane move. This was where the VIX was at on Friday, and even if I gave the VIX the benefit of the doubt at 20.5, okay, a 20.5 VIX, I'm like, all right, well, to the upside, a 20.5 VIX, we should see about a 1.28% move. Like that's what the S&P on a normal math basis should be capable of is 1.28%. And that's kind of the extreme, right? It's a lot easier to call the top when the VIX is going down because that means that volatility shouldn't be built into current price action. So we'll go 1.28%. Now, I calculate 1.28% now, and I do this again, all to be conservative. I don't like to be blown out on the top, and I certainly don't like to be blown out on the bottom. We are trading daily profit play. That is an efficiency-based strategy. So when the market gaps, I'm taking this gap plus my VIX calculation. And what did I say? 1.28%. Okay, so can everyone see the top of this box here? The top of that box, you can see that when price reached it, stall, 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 stall. Okay, so I pictured for the remainder of the day that this would be the top and we kind of settle back in. Maybe we stay there. We've seen days where the market is at the highs all day and stays at the highs all day. We've seen the market go to the lows and stay at the lows all day. But rarely does the market push higher. And so when this breached, 69.20 and ran up all the way to 45 in the final 15, 20 minutes of trading, I was like, I could see that happening. And then coming back down below 20 would have been like, okay, it was a little surge, but market makers clearly like kind of tied it all together and wrapped up the day. They didn't. They failed. And that doesn't happen very often. So it was kind of crazy. But when I looked across the board on Friday, we saw the Dow above 50. We saw everything up on the day. We saw 80% of the heat map was green. I'm like, they're going to juice this thing to the close. And they did. And even though the market dropped a quick 15 points at the end, it was already way beyond the calculated move. And the crazy part is this surge was almost as if the VIX had been up to 27. And it was not. The VIX was nowhere near that. The VIX was at 20. The VIX high for the week was 23. So very unusual. I would say that the closest thing I've seen to that would be like Jackson Hole last year in August was similar, but I still was able to call the top at Jackson Hole. I calculated the VIX, did the math, used the gaps, and called the top and was able to grab a few bucks on the end of the day and the next day. This is probably the closest thing I've seen since like April 9th, which was the infamous day that Trump's like, great time to buy. And the market was up like 9% in the NASDAQ for the day. It was up. It was either 9% S&P or it was 9% NASDAQ. But I think we had like a 7 to 9% S&P and like a 10 to 12% NASDAQ on one day. So it's blowing through all these levels. And it is kind of insane to think like the market just wrecked the efficiency to the upside. And that's so rare. But like I said, it is what it is. So that is why I accept that, yes, I did not win the trading on Friday. I lost on Friday, and net I was down for the week because I had a losing day on Tuesday and I, over traded on Friday. Could I have mitigated both days? Yes. If you were with me all week, last week, I was staring at I'm trying to think on Tuesday. I had so many profit traps on Tuesday and it slipped through all of them. And I think I lost like $500 on the day. or no, I lost $1,050 on Tuesday. And I didn't have any profit traps that I was willing to close at the end of the day. So I accepted the risk. I lost money, no big deal. We came back and bounced back hard on Wednesday and Thursday, made a couple bucks there. And then Friday, that surge at the end was what kind of blew up my trade. So I lost another, $700 or something on Friday. So net, give me 10 days, I'll make it back. I'm never worried about that. Like zero DTE is, if you want to have some grit in the market and you want to respond, it's like, don't revenge trade, but know that an inefficient day is going to likely turn around and give you multiple efficient days right around the corner. And so today is kind of one of those days. I think that today this market probably settles down a little bit. VIX is at 1875. We'll see. I mean, maybe this is going to be right back up to the highs again. So I don't know. I think at least it's going to calm down. I'm going to look at a pretty simple trade now. Full transparency for this week. This is going to be a very disruptive week for me as far as trading. I have limited time to be on the computer. I'm literally going downstairs like right after the session to join our Diamond Club members for our conference, and I'll be here like all day Monday, all day Tuesday. I'm traveling Wednesday, and then Thursday, Friday, it's just going to be me and my 1-year-old, and so he'll probably be crawling around on Thursday, Friday with me. But like that's about all the time I really have to like be at the computer. So not a bad thing, but just saying like I know that the best thing I can do is just focus on my plan, define my risk, take my trade, and go from there. Right. So this week it's probably not going to be as many like butterfly traps and watching things to the close. I'm not going to have the time luxury this week, but that's okay. We'll still figure out how to make some money this week. And the dog, exactly. Yep, they'll be hanging out with me on Thursday, Friday. I know, right, Roy? All that no sawgrass. I know, man. And we're right here. Like we're on like Tournament Players Boulevard. It's right down the road. Last time I played sawgrass was back in college. It was a spring break trip. So crazy, right? Gamma levels. Let's have a look. Let me bring up a dynamic trend. Let's get some Tanuki trading here as well. So open up some of this. All right. Log in. Okay, so Gamma. Let's get a little pre-market Gamma this morning. So I am seeing just out of the gates pre-market. We have that huge surge. Biggest level I see right now is 68.40. Let me check on Tanuki Trade on my workstation here. Give me a second. So I'll float this out. We'll bring this back up. Again, my workspace is in order. This will be, so big picture for SPX. This is live, by the way. Futures down 0.31%. Okay. All right. Steve, that butterfly 85, 86, 90. Those strikes don't look familiar to me. If it's I'm not sure what that is. So XSP butterfly, that might be an engineered options that I have as a bonus trade. But those strikes don't sound right. If you want to send me a screenshot, send me a screenshot, or just give me the exact details. You have 2.9 expiration, 90, 86, 85. Okay. That sounds like you would have, I feel like it's got to be 90. It'd be like 1 wide, then 2 wide. Let me double check. Let me bring my broker platform up here. Okay, so right now, let me check and see. I don't have anything other than the 227 expirations. My engineered option trades are all closed from Friday. SPX. We had some waterfall trades filled last week. Okay, plus or minus. Yep, let me check that really quickly. Get my face out of the way. All right, SPX for the day. So I'm showing pre-market 46.82 on Tasty. 46.82 on Tasty for the day. We'll get some levels. I'm likely going to look at probably a 5 wide because I'm not going to be able to manage the trade the same way. I'm probably not going to throw defense on. I think I'm just going to try to get like $1 credit and risk 4. Or if I can get $2 to risk 8, that's fine. I'm okay with that. But I'll have like limited time to sit and watch and manage. So I'm going to put the trade on, accept the risk. If I throw in a profit target, great. That's obviously easier to hit than holding it all day. I'm going to set some chart alarms. So at least if I'm downstairs speaking, I've got some chart alarms on the VIX. Like, you'll see me smile or not. I'll see some trade fills on my phone with if I'm getting filled for profit targets and stuff too. So, all right, yep, 46.47 on Tasty trade. So 46.42, which means we're going to get a little bit of a gap lower today. Let me do some math here. We got a couple minutes for the open. So we have, I'll move these alerts around. Let's get some lines. That's based on efficiency. So the market, we're going to gap a little bit lower. So what I'm going to do is start here at the close from Friday, and let's move about 47 points up. Okay, so 47 points up. That should be our top of the day based on market maker efficiencies. That should be our top of the day. And then if we gap lower, let's take the gap and move about 0.25 lower. So we're going to start at 69.11 and then go about 47 points lower. Okay, so that should be. So as far as like today's trading, if the market makers are accurate with what they're telling us right now, which is this plus minus 46.82, we should not see prices moving above around 69.78 or below 68.65. So that's expected move efficiency. Type in a yes in the chat if that makes sense. Okay, so for daily profit play, that's what I'm going to focus on. I'd obviously like to get a little bit higher, a little bit lower, and keep my trade slightly out of the way. Okay, how does this plan change this morning? Well, if the VIX is going to go up again, let me bring up this other workspace here. So if the VIX goes up a little bit, then I've got to be mindful of that this morning. And I'll bring up my, this is my gamma levels for the day as well. So keep an eye on the VIX. I've got a VIX chart alarm set already at 20. Right there. Just going to get rid of some of my browsers to not overwhelm this. Okay, so chart alarm set. I'm going to move this down to 20. And if we work it back down to like 18 or 1750, like this would be a good thing if we just have the VIX kind of hang out sideways, maybe go down to 18. That means we'd have some kind of hopefully upside, limited move to the upside, and we just stay within the efficiency range. Okay. So like I said, the way I'm measuring this is we're going to gap lower slightly. I'm taking that gap plus the market maker move. I'm taking the close from Friday plus the market maker move. So efficiency wise, we should be lower than 69.78, higher than 68.64 if we can say at the end of the day, market makers did their job. All right. Which means I can also position my SPX trades slightly above and slightly below. And hopefully that's a safe trade for the day. Now, what would be an annoying Monday, and I'm just saying this right now, what would be annoying for Monday would be if the market decided that it's going to gap lower and press lower to come back into this massive inefficiency from Friday. I don't think that should happen, just because it's like, how about we give the market a chance to catch its breath, right? This was a large gap lower, like 0.8% lower, and the market stayed efficient on that gap. This was a gap higher by 0.5%, 0.6%, and it proceeded to push directionally all day. Last week, Friday and Tuesday were both inefficient days. We don't really see that happen in a week and have two like kind of off days, but it was challenging. The VIX was very slippery last week. It was, up to 20, up to 21, up to 23, and then retreated hard last week on Friday with that big up move. So anyway, we've got opening bell here in just a minute, and I'll see where we're at for strikes. Okay, we'll do the SPX. So Terry, so who's in engineered options? I mean, I posted that alert last week on Friday. I posted it in your classroom alerts. I posted it on Telegram and in the Telegram channel. I took those profits. If you are in profit on those trades, I mean, like right now, it's like XSP is opening at what price? XSP live is trading at XSP. So live is 691. Now it was up to 693 last week. 691 is going to be a little bit flirty with that second level that we had. That was a break-even trade we took last week. So if you're still in the 2.9 expiration, if it's offering some profit, but you have the 686 offering like bigger profit from the weekend decay, hopefully the weekend trade is worth even more. So let me check these fills from last week. So the 686, 685 is now trading. It's still trading for 14, 15 cents. I exited at 16 last week. The 50 cents closed at 35 cents. Right now, that's probably trading around break even, trading at 40 cents. You can still take a winner there. And then the other trade for the Feb 9 695, that one is trading for about 77 cents. So that one's down about, well, I guess 80 cents. So it's down about 30 cents. One is up 35 cents, one is up 15, 20 cents. So you can still net profit on the day if you take the profits now. Now, if price stays above 691, you're going to have two full winners, and you'll still maybe take a loss at the 695. Okay, so that's why I communicate on a Friday. I'm like, if you want to hang on to them for Monday, I'm cheering them on. I want them to go up, but it's like, because it was a volatile week, I wanted to make sure that we safely had some profits booked and we had some net profits for the week. That was my goal. Okay. All right. So I'm not saying like you got to hang in there and hang on to them. You don't. If you're net profitable, I'm happy taking the profit, and we got a new setup for the week, new setups. So I'll get those out this morning. Okay. Here's daily profit play for the day. Again, I'll keep an eye on my efficiencies. So we have a gap lower right here. Let me make sure I did the math right there. So we opened around 16. If we go 47 points lower, I mean, actually my level here at 68, 64 should be adequate. All right. Let's go here. So let me see what the deltas look like this morning. So my 10 delta is 69.60. And I've got the kind of the safe high is around 78. So can we go like 80? I'm going to go 69.80, see what that offers. 69.80 and 90. That's a 5 delta. That's super low. And then down here, 60. You see if I go 60 and 50 and see what that premium looks like. 68, 60. That's a 20 delta. That's way more than I want it to be. Interesting. Let me move this down a little bit. So 10 delta. So that's $1. Let's see. If I went 10 delta, 10 delta, let me move this around. So if I go about 10 and 10, okay, so I can get $1.50 at like right now opening price with the gap lower, 10 delta. I'm going to move this up a little bit. I just like how we calculate out the efficiency on the day. I need this to be, below 80. So let's see if I could do 85 by 95. And a 10 delta here would be 30. I'm going to go 30 by 20. Let's see if this will fill for So $1.50 to $2 is fine. I'm going to take this trade for $1.50. Okay, working order there. All right. One other thing I'm kind of willing to try today would be look at the expected move right now. Let me see if the gamma has changed a little bit this morning. All right, so that 6840 is in real time. That's a little bit more reduced. This is the 6840. It's kind of a big reading this morning. But to do that, we'd have to see the VIX probably rally a little bit. Yeah, I'll take a look at those. I'll take a look because we had a gap and everything. That's what makes sometimes the gaps on Mondays will make my engineered options new weekly trades a little bit different. But I'll get those calculated out in a moment. I'm trying to get a daily profit in right now. So real time, it's like I'm seeing gamma up here at 7,000, which obviously I don't really want to see that hit today if I'm gonna kind of call that top. Okay, let's keep an eye on this. So what I was thinking is if I did 80, so expected moves already dropped at 35, so from 46 down to 35. I mean, if we did 50 points, that'd put us at like 70, 75. Current price is 23, go down to like this one's not terrible, but again, like the skew in the market's pretty big. All right, I'm just not going to get super cute with this today. I'm just trying to think if I can place a trade inside these levels. I just don't want to take a trade like if I'm going to get closer to the exact market maker move, I want to set a bit more credit and reduce the overall risk. Does that make sense? Let me see here. What's like an iron fly? I'm just curious. If we're opening up at 20, I don't know. It's hard for me to trust the market's going to go like absolutely nowhere today. But I'm curious what let's flip this around. If I did a 20 by 30, expected move is 32. So let's go out here. That's 40 wide and 40 wide. So I'm risking 1,000 to make 2,000 if price stays inside this market maker move. That's a little excessive on the risk side today. Okay. I mean, you just need like zero movement, right? You need some time. Like this max risk could be 1,000. If you're dead wrong, price would have to be above 69.60 or below 68.90. I mean, based on what I've measured out, like that could happen. We could be up here towards 80. So I'll pass on that trade. All right. So the trade I'm looking at right now, let me put this in Telegram. I'm just going to throw this on my phone. So 85.95, I'll put this in Telegram for daily profit members. New trade. This is pending. Today's the 9th. 69. So 6985. Six, 995. 6830. Okay, trades in for a $1.50. We're gonna have to see a bit more direction. Okay, we get a little bit of bullishness. Hopefully this will get us a fill this morning. Delta wise, right here. Monday's a holiday. What Monday? Today? Today's not a holiday, is it? Not a market holiday. All right. So 85.95. If I want to go a little bit higher in Delta, that'd be a 75 by 85. Okay. And we can certainly get more premium this way. If I did 75 by 85 on the call side, and then on the put side, I find my current 10 deltas, that's a 55 by 45. I mean, you can get a $1.70 on that trade right now. The only reason I'm not taking that trade is, the way that I calculate my efficiencies, and this is hopefully to keep us very, very safe, is if we gap lower, gap higher, I tend to take the move, the close and the move and the gap and the move. So if we were to gap, let's say the market closed here on Friday, opens lower. Well, I take the close plus the market maker move. I take the open in the market maker move. So that hopefully creates a bit more space where our top and bottom is safe, right? That's within like market maker moves. So every time we're looking at the day, I always ask the question, did the market makers do the job? And I mean, typically we see like 9 times out of 10, they're doing their job. Okay. So I don't want to get too cute on the upside here because I feel like we could push a little bit higher. 0.7% of the upside. VIX right now is 1807. Just over 1% move. So 1.13. That'd be on the extreme side. Okay. So my current trade that I have pending for daily profit is still sitting at 80 cents right now. I'm not getting filled on that yet. Nice, David. Just got on my 3 levels engineered options profit, $1.14, $144, $114. Is that GUR? I mean, it's better than a stick in an eye, man. I'm happy that we're profitable. So, Feb 16th. Oh, that's fine. Yeah, it's fine. We'll look at our levels on Tuesday. I did plenty of testing where markets are closed on MLK Day, President's Day, Memorial Day, Labor Day. There's plenty of those holidays. So I just take the trade on Tuesday. No big deal. So we'll go like Tuesday to Monday the next week. Okay. All right. Let me see. So right now we're trading around 35. I'd like to see this one fill for like $1.25 or $1.50 while we're live today. If it doesn't fill, I mean, honestly, this is what I don't mind. Like, even though I'm not at my desk all day like I normally am, I'm still very confident in the process that I'm executing for daily profit play. If this trade fills for $1.50, I am 90% confident that we get filled, we still make profit. But what I don't have to do is like, oh, I'm going to change my levels and I'm going to finagle my trade. It's like I jumped in, I did the math this morning. I'm trying to be efficient. And if I'm staying above this level and I'm staying below this level, what I'm looking for is if there's any direction where we can get the fill and the credit that we want. This is why I am like very strict on daily profit play. I don't want to take this trade for less than $1.50, right? I mean, if I took this for a $5 wide spread, I don't want that trade to be less than $1 credit. So if I did an 85 put this in. If I go 85 by 90, and I guess our downside, we had it around 65. I mean, I could, this might work. 65, if I went, so I'm doing 85 here. Let me go 60. So like even that trade, I mean, that's a good trade, but I wouldn't take this one for less than $1. So I want to make sure I don't overlap here. I could. This one's totally fine. All right, here's what I'm gonna do. I'm gonna put a trade in for $1. So I got one more trade coming for daily profit play. Now, if you don't want the strikes to overlap, then maybe we could do 95 by 7005 on the 10 wide. I'm sorry if I'm like speaking in tongues for somebody that's never followed daily profit play. This is stuff we do every single day. So what I'm saying is here's a trade that I like. I'm going to put both of these in. Even if I'm overlapping the strikes, it's okay because I'm still selling the 85. It's the same strike. So if I sell the 85 and then I buy the 90, so this is 6985. I sell that call, I buy the 6999 or 6990. And then on the put side, I'm going down to a 10 delta and I'm going below my market maker efficiency level. And there's a 6860 by 6855. It's a bull put spread. So I have the credit spread above current price. I have a credit spread below current price. And right now they're collectively offering me about 60 cents. Now, I don't take that trade. Like I put it in, but I'm putting in $1 credit. So I know that my risk is 4, my reward is 1. And I'm just fine with that. Like that reward to me is fine. It's adequate for this type of win percentage. We're trading within the market maker efficiency levels. They should hit this level, 90% of the time. Our deltas are 10. This is a 7 delta on the call side and a 10 delta on the put side. That should give us a 90+% chance of profit. The only issue is the broker shows that trade for 60 cents right now. So if I let it sit for $1, if price doesn't move enough, this might not fill us. And that's okay, but I can't control that. Right? So if I put both of these trades in, I'm just looking to see if I can get a trade filled. Okay. I like the levels. I hope that we get filled. I mean, price is trying to grind a little bit higher. Because we have that VIX measurement, VIX is crossing 18, so we're making some fresh lows on the VIX today. So we had an 1888 VIX. Is that just this morning? So we had a VIX around this kind of intraday high. This is at 5 in the morning. 1921 VIX. That's 1921. So like a 1.2% move. That's pretty extreme. I don't think we should have that move. 1.2% from the close. Is price coming up today to 7014? I would friggin' hope not. Okay, let's just hang out and see if this gets filled. Should engineered options be 218? No, it should be the 17th. If the Mondays are closed on, if markets are closed on Monday the 16th, we'd probably go to the 17th. Right? Look at your expirations. So we have the 17th is Tuesday. So if for any engineered option trade we have, we'd probably go to Tuesday the 17th. Okay. All right. So here's the deal for daily profit play. Pending order, it's the 10 wide for $1.50. And I'm double dipping on this one. I don't know if they're going to fill, but I'm fine with them being taken. So I'm going to go 2.9 expiration. I'm going to sell the 85 by 90. So 6985. and then 6,990. And the put side, I'm going to go a little bit tighter. That is a 6,860. And buy 6,855. Okay. I know the 6,985 strike overlaps, but I'm okay with it. If they both fill, I'll keep them open for the day. Okay, so I'm not going to micromanage these trades. They might not fill just based on what we have price action wise right now. Like things seem pretty darn choppy this morning. And that's okay. David, I'll type that all in for engineered options. Once I get my levels, I'll type it all in. Okay, I'm probably gonna do the same type of thing as if we get a break even. If we get a break even, we get a defense. I'll do like a 1-2-4 combination like I did last week. Okay. When do you see the participation level being put? I mean, I'm going to try to get it in now since I've got a feed on XSP. So we gap slightly lower. We can probably just start out with like, if the market's going to be up this week, we can start participation. We'll get our break evens. Okay, if I went just playing around with this trade here. So we kind of open the day. We opened around 16. We'll see what happens. VIX has to be going back up now. So set a chart alarm just above that VIX high. Set a chart alarm at 20 and change in case this thing is starting to go up on the day. $25 by 65, 30. So that's 40 wide. I mean, part of me wants to take a swing like this, but it's not very efficient. Like that's a lot of risk. We're expecting little to no movement, and obviously I've seen price, from a 46 market maker move. That's a little tight. So I'll pass. I can do that from the comfort of my own home, and I can watch this stuff all day. All right. So I've got a couple chart alarms set on the VIX. Pending orders for daily profit play. Prices are still moving in between. That's fine. So 2 pending orders in Telegram. One is 10 wide for $1.50. One is 5 wide for $1. I am overlapping the call strikes, but I'm not overlapping the put strikes. Okay. So we'll see if we do get an efficient move today. Given last week, Tuesday, Friday, they were inefficient for the market. Hopefully today is efficient. I'm trying to not be super tight to current price, just in case we get a bit more slide. Okay. So I'm trying to think like, what else can I do this morning to maybe get a decent trade in? I mean, part of me love a profit trap, as always. I always love me some profit traps. Problem is I'm not going to be able to manage it. So I kind of like the idea of like an iron butterfly. If I think we have an indecision today, an iron butterfly is not a bad trade. So 20, 25. If I went 30 wide and 30 wide, this one's okay. I mean, this is max risk at $730. If prices are chill, calm, this one's 35 wide, 35 wide. Come on, go to 90. There we go. That's over $1,000 risk. see. So here's what I'm debating. It's like if we have little to no direction, this trade is pretty fantastic. We can make up to 2 grand. I'm risking 1,000. If price isn't moving all over the place, all I do is if I collected, let's say 24.80, and this thing trades down to like 22.80, 21.80. I mean, that trade looks great. Do we have any major news this morning at 10 o'clock? If we don't, I might take this trade and just let it ride. I put a profit target in, so I don't have to micromanage it. It's all low impact today. Fed talk, Fed talk, Fed talk. Okay. Are we getting more direction? Not really. All right, this might be a good trade. 25, 25, 20. Okay, let me recenter this. I think I need like the either 25 by 30 or we open up around 20. I think 20 is good. 20 by 25. All right, see if we can get 25 dot 10. It should be just under $1,000 risk. 20 bucks. 25.15. Ah. All right, I'm getting filled. So that trade's coming in right now. That's an iron. It's a modified iron butterfly, which is a stupid name for a trade that basically says if price stays somewhat range bound between, let's say, about 69.45 to the upside and about 6,900 to the downside. If we stay kind of range bound for this morning, that trade is worth up to 2 grand. I got filled for 25.15. So here's a new trade and filled. There's not overlaps here. SPX 2.9 expiration. So I'm selling 6,925 call, and I went to 55. So it's 69.55 call. So 30 wide, and then 20 put 6,920. So it's 20 and 55. 20 and 55, 25. That would be 68.90 put. 25.15 credit. And that's filled. Okay. So what this price is doing, let me build, I'm going to build this trade on an option strat so I can give you a visual here. So I'm going to put a profit target in on this one. I'm accepting the risk in full. That's maximum risk. If price is above 55 or below 90. So if we're above 69.55 by end of day or below 68.90 end of day, then I'm going to lose. But if price is inside of this 25.15 credit, as long as it's trading for less than that, that's a like every dollar, like if this is down to 24.15, 23.15, 22.15, that's profit. Okay, I'm going to go after a pretty conservative 10% profit here. So 10% at 25.15 is 250 bucks. Okay, so 2.50 minus. If I set a debit at 22.65, that's going to make me 250 bucks. Okay, so let me bring this up here. And 1, 2, 3, 4. This is daily profit play. So again, we see this trade filled at 25.15 credit. I'm up a few bucks right now. I'm just going to go ahead and set a take profit here at 22.65. 22.65 makes me 250 bucks. Okay. So all price has to do on that trade, I'll build this out on option strat and show you what this is. Yep. So this is not one that I want to take into the close. This is one that if we basically have like, a little chop this morning, a little indecision, this trade's open for 60 minutes, 90 minutes, and price is very sideways, we should see some quick time decay working in our favor. So let me drag this over here. Build this trade out. So I'm going to start this off with an iron butterfly. I'm modifying it, but build iron butterfly. Oh my gosh, just okay. So let's build out an iron fly. Oh my gosh, dude, give me the trade. Thank you. All right. I want to build the graph. Expiration is the 9th. All right. Sorry. The old laptop. So I went 20 by 55. So I'm on the call side, selling the 20, buying the 55, 25 by 95, 90 there. That's the trade that I just took. Okay. Now, live price is 69.30. Okay, live price is 69.30. So as this trade, here's like a live feed, right? So if price kind of comes back in between 20 and 25, somewhere in here, there's some pretty aggressive price action here. I mean, this trade should be pretty straightforward to make like a quick $100 to quick, $100, $100 to $200. This trade should work out. Now, as time passes, let's go to 11 a.m. Eastern time. 11 a.m. Okay, again, if we're trading between about 69.20 and 69.25, let's say between 15 and 30. So between 69.15 and 69.30, we got a couple bucks in here. If we go to noon, this jumps up a decent amount. Again, between 69.15 and 69.30, this trade is now worth, maybe 300 bucks. So to be safe, I'll set a 10% take profit. That gets me about $250 in the trade. So all I need price to do is just cooperate. A little efficiency goes a long ways today. We're hanging out at 30 right now. I obviously don't want to see price, breaching like 50 and 55, or at least if it does, I don't want it to stay there. So I'd like to see price just kind of hang out here and see if we can grab a nice little profit. Okay. So that to me, it's like if price goes nowhere, I have an opportunity to make a few bucks with very centered pricing today. If price moves a little bit higher, lower, we can maybe get filled on our daily profit plays, iron condors. Those are pending orders. So this one's still pending. It's $1 that's trading for 40 cents, $1.50 trading for 50 cents. Right now, the probability of those getting filled, unless we have a big move in direction, those probably don't get filled. So this one's a fighting chance to participate in the market today. Okay, max risk on that trade is 985 max risk. If price is above 69.55 or below 68.90, so I don't have my drawing tool up for whatever reason. Where's it at? Oh, here it is. So if we are going to hang out here in the middle, that's what we want. If price is below 68.90 or above 69.55, my max risk is 985. That's the most I can risk. So that's why I'm going to set a profit target, because this is not one that I can sit and kind of, micromanage through the day. Okay. So I'll set the take profit on that one. Couple things. This could all set up to be a pretty interesting day. If we breach the upside, I mean, I kind of want to have a chart alarm. I also don't want to annoy myself for the day, so I might just let this chill and marinate. Right now, that trade is it's break even. I mean, here's the recap. It's break even. So if price just hangs out between 69.20, 69.30 for 30 to 60 minutes, this trade should offer us a few $100. Okay. So I'll see what happens. That's kind of it. Like right now, daily profit play is still pending on the upside downside. I don't know if those are going to get filled. Hopefully the markets are going to be somewhat efficient today, because we got the Dow opening slightly lower. Probably the market's getting a bit of a hangover from that crazy surge we saw on Friday, but I'm trying to bank on some market efficiency today. Okay, now I'd like to switch gears to engineered options. Let me bring up that workspace. So here's my new starting point for the week. And I'm going to focus on 3 levels. So break even, defense, defense. If we have an up week, we can get a participation trade in. I could probably do that now at like the 695. See what those look like here for SPX or XSP. I'm probably going to go XSP for risk. Liam, senior comment there. Investors rotate out of tech, software, industrial finance. Yeah, I mean, we've seen a pretty aggressive, but I do wonder if Friday is like kind of opening the doors again to maybe see like, hey, oversold tech is maybe getting a surge. I mean, Nvidia was up 7% on Friday. We had a big jump in mags. We had a big jump in tech. And again, I think it could be a one-off. It could be either washing some of the risk, trying to pump it up really quickly for short-term stuff. I mean, Bitcoin went from 60 to 70. That was a short-term trade. I don't think that thing's going to V-bottom. I think we're going to still trough out in Bitcoin. But anyway, Rob says you managed this trade to let it expire at the end. If you're talking about the daily profit play, I'm going to put a take profit in, and that's it. The risk is managed because that's my max risk. The profit, I've got to take profit in at 22. Let's go SPX here, 22. I'll put that in Telegram as well. So SPX, 22.65 is my take profit. So I'll edit that comment. So putting in a closing order. $22.65 debit for a 10% winner. Okay. Usually on iron butterflies, that's like the safe mechanical profit, is taking like 10%, 10 to 15% on an iron fly is pretty accurate. Daily profit play, iron condors at like, 30%, 25, 30% are really mechanical. Ideally, I like 50s and 100s, because if I'm going lower deltas and trying to give myself a bit more breathing room, I don't mind going out a little bit longer as far as like bigger profits. If I can pull in $1, let's say I did that dollar credit. If I can close that thing down for like 20 cents or less, I'm pretty happy with that. But I'm going lower delta. I'm going way past the expected moves. And most of the time, those days that we have a little direction, we get filled. But if we don't, those sometimes we'll just sit and marinate with no fill. So let's say if I put in the trade 5 days a week, maybe get filled on 2 or 3 of them, win 90+% of the trades. Like that's a good trade. But today looks like one of those days where, my 5 wide and my 10 wide are not getting filled this morning. So I'm taking a stab at the middle with the iron fly. Okay, possible defensive trades in the run up. I mean, possibly. I think it's going to be limited. Again, I'm just if I put in defense trades, I don't have the ability to manage a fly today. I don't have the ability to manage my butterfly. Butterflies are great at the end of the day, right? They're great for defense, but I don't know. I mean, if I put on a butterfly up top, and then I want to put one on the downside, it's like I like to take butterfly spreads for defense if I can manage them, because that way I can sit and watch and assess the P&L. Right now for the day, because I'm going to go down and start talking for the rest of the day, and I won't be at my computer, I think I need to set my trade up, set the risk, and be good with that. And that's my day. Okay, so I'm just going to let those trades sit. And we have one in for daily profit play and a couple that are pending. What I like to do now is let's get some engineered options. We're trading at 692. We opened up, so the live price for the week is right here at 691. I'm going to go ahead and set. If the market can have at least a break-even week, I'm going to do a so we opened up, I mean, literally at 691.81. So it's like I have to do like the 691 by 690. I'm going to start that as my break even. So participation trade, we probably have to do like a 695. Let me try this trade. So I'll go XSP. Let me see if I can get some weekly gambling here first. All right. XSP. Let me see what I can get for a participation trade this week. That way, if the market's up this week. So at 95 by 94, that's over 50 cents right now. Oh, that's the debit spread. Never mind. Let's go 94, 93. It's for 45 cents. If I go 95, 94. All right. If I can get this one's offering 57 cents. See if we can get filled here. This would be decent. If the market's up this week and it stays up through Tuesday, well, now I got to go out to, never mind. Sorry, wrong expiration. So the 17th is Tuesday. So we get through the holiday on Monday. Tuesday, 95 by 94. That's about where I'd like to start. We opened up around 691.80. I don't like to go more than like 3 points higher. So if I go 695, that's adequate for a participation trade. If we went 96, if this has to offer over 50 cents for me to take this trade. So even that's 42 cents. Like I'm not going to take that trade right now. So I'm going to go 95.94 for 50 cents. Okay, so this will be a pending order. All right, I'll get these all in Telegram as well. And then the break even is we opened up at, I'm going to go 691, 691, and 690 for 50 cents. I'm going to go 1 contract on participation, 2 contracts on break even. And then my defense, is 684. For 50 cents. And all the way down here towards 677. So I'm going to go 678 since that should be a pretty good bounce. 678 and 77 for 50 cents for 4. Okay. Trades are coming in for engineered options. Stand by. All right. New trades. We have next week, Monday, is a market holiday. So I'm selecting the 2/17 expiration, XSP, 2/17 expiration, 695, $694, $691. So this is one contract for me. Okay, for all my engineered options members in like 2 minutes, let me know if this comes through on Telegram for you, okay? And then we have the 684, 684, 683, and 678. Okay, just posted that on Telegram for engineered options members. Let me know. Yep, 17th is the expiration. That's going to be next Tuesday. Okay. So those are in. Good. All right. So let me get that updated in our tracker. Okay. Come on, price. So if I have price covered, I'm just thinking of current direction. If I have price covered to like 65-ish. See something here. Our daily profit plays are still pending. They're not really moving much, which is a little annoying. Upside 65. See if I can get a little bit of an overlap here. This one's offering like 3-1. Trying to get a trap in here. So there'd be a break even around 80, break even at 50. So if we're hanging out between 50 and 80, there's another winner. Like, what are we doing today? Are we going? Come on, man. Like, I'm just saying, don't be like another inefficient day. Please, not to the upside. Like, that's exhausting. Yeah, that's what I'm debating on right now. Like I said, my only hesitation on just throwing a bunch of defense trades in or one defense trade in is like, I can't manage that trade. Like butterflies, all the big profits that happen on defense trades are at the end of the day. So the only defense I feel comfortable doing would be like a broken wing butterfly that I can set it, forget it, see if this market would give me, maybe a like 7,000 handle. Let me see something. 90 by 7,000 by maybe 20. That's a debit. I need this to offer a credit. Yeah. So the 5 wide is still trading for 60 cents. I'm sorry, 5 wide still trading for 40 cents, 10 wide trading for 60 cents. Neither of those have filled yet. The day isn't done. Come on, man. Don't be inefficient, you turd. All right, I'm just going to hang in there. No over trading, trade that I can manage. Don't throw in trades that it's like, sounds good. And then I have no idea what's actually going on and I can't monitor any of this today. So I'm just going to show some discipline and not overtrade. Look, I'm hoping that the market will, if we, poke the highs, that's fine. I just want to see if the market will just kind of come back in here and chop around. If it does that, our iron fly is great. Okay. But I also accept the risk. Like if we are, blown out to the top, okay. I mean, I will keep trading, but it doesn't do me any good to feel like I'm putting trades on that I can't watch and can't manage. So the day isn't done. If you want to put defense in, like maybe going like a very cheap fly at the top, that'd be like, maybe pinning 7,000 to like 7,080 and 20. I can show you how cheap it'd be if if we're worried about the upside, it should be pretty cheap. If I were to go like a call fly, even a put fly, doesn't matter. So if I went 20 wide, this should be pretty cheap. So for 50 cents, right? For 50 cents, you have a $20. Well, it's a little wide. If you could get this trade for like 75 cents or less, that's a 20 wide trap. So if price crept up to 7,000 today, you've got, $1,900 with a risk of maybe 50 bucks, 50 to $75. Like that's obviously not a terrible trade. Question, of course, is are we going to get 7,000 today? Well, let's bring up some gamma. And is it possible? It's possible. So guess what? If I can get this trade filled for like no more than 75 cents, I'm going to try 55. Let me see if maybe the call size is a little cheaper. But if I take this trade, I'm going to delete my daily profit play. I'll share the numbers here in a minute. So if I went 80 by 7,000 by 20, so 80 to the zeros to the 20, that's a 20 wide butterfly. That shows about 85 cents. Okay, on the put side, it should be about the same price, but if I go 80 and 7,000 and 20, maybe it's a tiny bit cheaper. I mean, that's way cheaper. Let's try this one. Maybe less than like 60 cents. Let's try 50-cent debit. See if this will fill. Okay, I just got filled for 50 cents in that trade. All right, let me get a notepad up. Just want to make sure we're all on the same page for this morning. All right, today's trades. So I have a modified. I'm doing this. So I am trading SPX center with a modified iron butterfly. So that trade is right here. That is SPX, 2-9 expiration. That's the 20 by 55. So I'm selling 6/9/20 call, buying the 6/9/50 call, selling the 6/9/25 put, buying the 6/890 put for 25.15 credit. Okay, so I have 25.15 minus 5, so like 19. It's like 19.15 max profit and about 9.85 max risk. I need price to be less than. So the call side is 50. I need price to be less than 45. So 6/9/45 by end of day. I need price to be greater than. We'll go 6/895. 6. It's be 25 and 25. I guess it'd be 6,900. Okay, so if price is less than 69.45 or greater than 6,900 by the end of the day, I've got a profit trap in there with that iron fly. That trade looks like this. So I have risk. I have my little trap here and profit. So this is worth about $1,900. This thing is perfect between 69.20 and 69.25. So if we're somehow at like 30 today or 25 today or 20 today, this is very profitable. If we're hanging out at 40 today, that's okay, but it's just going to be a smaller profit by the end of the day. Okay, so that's filled. SPX. I have a trading efficiency with DPP trades. So that's SPX, 2/9 expiration. Those are working orders still. I don't think those are going to fill, to be honest. We're starting off already low enough today. I don't think those are going to fill. But I'll throw them in here because they're not overlaps, which is nice. I'm doing a 6/9/85 call, 6/9/95 call, 6/830 put, and 6/820 put. Trying to get $1.50 credit. Pending. Good for the day. Only showing about 40 cents credit now. At this pace, unless we have direction, we're probably not going to get filled in this trade. The other one that I have is, and this is an either or, but I'm putting in both because I don't mind the overlap. The sell 6/9/85. Actually, you know what? I'm gonna be safe here. And defense trade, which is my SPX fly. So that is the 7,000 one that I just took. So that is a buy 6/9/85 put, sell 7,005 put, and buy the 7,025 put. So that filled for 50 cents debit. So that's 50 cents max risk up to 19.50 max profit at 7005 pin price. Okay. So price decides to go up today. It cost me 50 cents to make up the $2,000. All right. So that's a defense trade. Now, right now, based on our working orders for daily profit play, I don't think these are going to fill. And I'm going to go ahead and cancel the daily profit plays for today because they're not filling. And if the market's going to stay like this for Monday, they're probably not going to fill. So I'm going to cancel these. And now what I have running is the iron fly with defense to the upside. That makes sense? So what I'm going to do on the defense is it's max risk 50 cents. I'd love to have a big fat profit target on that one. So I'm going to go ahead and set a take profit here. If we get in for 50 cents, this is a DPP defense. So DPP defense for 50 cents. If this thing can trade for $10, I'll just set a take profit in here at 10 bucks. I'll go 11.50 credit. Okay. Now that's wishful thinking, but that covers the risk of my entire iron butterfly. Okay. I'll go back to the notepad in a second. So my iron fly, I'm going to change this take profit. I'm going to try to go after a few more bucks in this thing. So we're trading at 50. God damn it. We're trading at 50 right now. All right. We might freaking need it. I guess my question is, are we going to 7,000 today? Because if we are, can we stay there? All right. Which makes me not want to adjust this defense trade. Let's go 11.50 credit. Might as well try to go for a little home run there. Go 15.50 credit. Make 1,500 bucks on the trade. That's late in the day, but I'd still love the trade. So we'll go big for a big take profit. All right. So iron fly is still working. It's down a couple hundred bucks right now. All right. Right now I'm down 260 on the iron fly. Defense is just kicking in. If we go up, great. Are we going to stay above? I mean, we've got to have positive gamma today, right? Okay, so price is above 69.10. We're creeping up here. I mean, if we're going to get like those, kind of all day low drift flows, like again, it's an inefficient day to hit 7,000 or 70.15 today. Could it happen? Sure. Should it happen? No. Based on market efficiency, it shouldn't happen. But I don't think this market gives a crap right now. It's so weird. But what I will say is, like today, it might not hit it, but if this is the flow and we stay positive gamma, like this market's going to try to go higher. Patrick says, got the first two at 50 cents last. Yeah, so if they're, don't take them for 25 cents. Put the pending orders in at 50 cents. I'm always going for 1-to-1 or better on that one. Okay. So if we have some chart alarms going off at 7,000 plus, I've got a pin at 7,005. So right here on this defense trade, lazy at 57. All right. That alert is obnoxious. I'm going to move this chart alarm back to like 25 in case the market kind of neutralizes on the day. if we go up, 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 up for the day, even if it's a slow burn to the upside, anything at 7,000 or higher and closing up here is a big profit trap for us. All right. So the way this is set up is I need the iron fly to have very contained price. If that is not going to happen, I need my defense trade to pick up the slack. So the good thing is having a gamma level at 7,000. That's a $1,500 profit trap. If we're at 7,005, that's a $1,950 profit trap. If we're at 7,010, 7,015, that's still a $1,000 profit trap. So if we're going to hang out here for the day and go higher, we're okay. Like that's pretty good defense because it's dirt cheap. All right. So let me put some scenarios out here. Potential scenarios. Okay, let me make a note. I'm going to cancel my pending daily profit plays. I'll put this in the chat. So daily profit play, trade updates. Daily profit play updates. I'm canceling the standard DPP pending orders. So the 5 wide and 10 wide iron condor trades are canceled. I'm keeping the iron fly. Adding a cheap defense trade. That's the 2-9 expiration. I'm buying the 6,985 put, selling the 7,005 put, and 7,025 put. Okay. So we may not get this high today. Ideally, here's what I'm saying. I'd love to see price do nothing. Like we just kind of work up for the day and we just kind of peter out here around like current price, work our way back down, and we stay centered and it's like a bit of a chop suey, nothing really happens today. That'd be great. If price is going to try to find these gamma levels, well, my defense trade could be great. Okay. DPP well, I mean, look at it now. Is it great? I mean, based on this market maker efficiency level, like it should be a good trade. I mean, I'm looking at gamma though. Like, could we get to 7,000 and 7,015 today? It's like, I wouldn't put it past the market. I want to say no. I want to say no, but obviously I don't want to call the top and be blown out of it. So I'm not going to take the daily profit play reward to risk profile, and just in case this thing's going to creep up all day. Okay, so I'm playing it safe. It's one less thing for me to manage. If I want to call the top, I'm looking at something here. Couple things. Could I do a 10 put, 69-10 put? Let me check on something. 69-10 put. Like this isn't a terrible trade. 30 cents. That's obviously not good credit. I wouldn't get excited about that. If we fell back to, let's see here. So the low of the day at 06. I mean, gamma's all the way down. I mean, I have no idea what's going to happen today. It just seems like the market's kind of picking up right where it left off, which is a little chop this morning, a little drift, positive gamma above 69.10. What's our move? We expected 40 something this morning, right? Like 46 this morning, which is how we measured these levels. So I think I'm okay. I don't need to sit here and like, again, if I'm over trading and I can't monitor this stuff, then I don't have a backup plan. Right now, I think that what I'm looking at is if the day is ultimately going to settle in pretty calm, where it's a flat day, that could be perfect for our iron fly. Because that trade to me is like, if I can get $300 to $500 out of this trade and I'm only risking 50 cents on defense, give me a few hundred net dollars and I'll be happy. Okay. So I'm going to set a take profit 22.65. We got it for 25.15. I'm going to go 20.15. I'm going to try to go after $500. Since we're already dealing with a little bit of a directional shift, I'm going to see if price will come back and recenter for me. And now that it's later in the morning, that will be worth some more dollars for us. So let's see if it works. If it doesn't and price is up here, 80 plus. I mean, at this point, from 80 plus, you might as well hope it goes to 7,000. Because if it does, then there's a big fat prop trap up there. Okay. All right. If you are not loving this iron fly, then get out. I mean, if you're down, it's like you can shave it off now and be done. So I don't want to book the risk. Like I don't want to take the loss because like I'll give it a fighting chance. I just don't know if the market's going to cooperate and come back to center today. So what I do have is this area is offering a decent profit trap. And if price kind of works its way here for the day, hits all-time highs, but we don't have any major selling pressure, we might just hang out here and get a $500 to $1,000 profit trap. I mean, we can make up the $1,950 up here. That pays for my risk, if we're right, it pays for my risk. So I think I'm gonna kind of let the day sit like that. So the way I envision this day working, even though I can't sit and manage this stuff all day, is one, price moves up to these gamma levels and we have another inefficient day. Okay. If it's going to get up to these levels and stay up here, there's a lot of profit on that defense trade that could pay us up to $1,950. That is going to be the pin price at 7,005. So if we're at like 7,000, that trade's worth $1,500. If we're at 7,005, that trade's worth $1,900. If we're at 7,010, that's worth $1,000. So we have a decent window up near these gamma levels at the end of the day. If it happens, it happens. Okay, that's a cheap defense trade. Now, the flip side is, let's say that the market just carves out these tiny little highs, but works its way back down to center. That's fine too, because that's where my iron fly is hanging out with a bit of a profit trap there. Now this one, because of time, should actually offer a bit more profit potential. What we need to see is price get down to probably 69.40, 69.35, in the next, I'd say by noon today, if price is back down to like 40 or 35, we've got some profit that we'll be able to see. Let's see here, Chuck. Why we ask for 50 cents on when they might be selling. Well, I'm asking for 50 cents because that's my risk, right? Like I don't want to risk more. I don't want to pull in like, 40 cents to make or pull in 40 to risk 60. I'm trying to pull in 50 to make 50. So I'm trying to go 1-to-1 and keep it very simple, right? Okay. All right. So I've got a chart alarm set here at 25, chart alarm set here at 80, chart alarm set at 7,000. I mean, I've got enough to monitor stuff for the day. I mean, obviously I can always call my broker platform and say, hey, trade desk, I've got a couple trades in, check them out. I can obviously run up to my room and, manage a couple things. But what I'm going to do today, so this iron fly, setting closing order at 20.15. Okay. And I'll let kind of the day work. If it works, great. If it's not, I'm accepting this risk. Hopefully it works, obviously. This one would be setting closing order. I think I did. Yep, 1550. So 1550 credit, and that's a $1,500 winner. So if that's the case, that gives me enough to, I can take on full risk here. If this closes for a winner, I'm still making 500 bucks net. The easy trade is this one pays us. This one's only risking 50 cents. That's much easier for the day. Like, I don't want to take on the excessive risk here. But if the data is just going to creep up, creep up, creep up higher, get up towards 7,000 again, which we do have all-time highs at 7,002. So the market's just going to run. What's our heat map today? Is it possible that we get to that 7,000 gamma? I mean, again, this is where I scratch my head where it's like, we're up, and yet 50% of stocks are down. Only 46% of stocks are advancing. So either we are led by very few stocks right now, like Nvidia's up, 2% or 3%. Let me check the heat map here. Nvidia's up 3% today. There's the single reason that the markets are up today. Microsoft up, Oracle up, like big market cap driving the SPY higher. So I would imagine the RSP is not having a great day. S&P is up, RSP is flat, 0.03, 0.04 versus the S&P is up, 0.42. Market, look at the NASDAQ equal weight, negative versus the Qs are up 0.47. This is Mag 7 stuff. Okay, you can let it, if you want to, David, you can let it sit at 50 cents and see if it'll fill. Even getting filled for 75 cents isn't terrible. I mean, you can make $1,925 to risk 75. That's okay. Is that fair? So any questions on this for the day? I've got to be courageous enough to walk away, know that my trades are in. I don't have I'm canceling the daily profit play just in case if the market is going to try to find these higher gamma levels, that's going to be a threat, right? Like I don't want to put in a sell call at 69.85 and watch it go to 7,000 today. So I'm going to play the iron fly. I'm going to play defense, and that's it. So if we can make in this iron fly, if price comes back down today and we can make a few $100 here, okay, guess what? We close for profit. This defense trade, I don't even care about. I lose 50 cents, right? So if I can make, $200 here, $300 here, $500 here, great. I'll throw away the 50 cents. So that's, to me, like that's a pretty straightforward plan to walk away from. If we hit gamma to the top side, that's fine. We have a profit driver there that hopefully will pay us pretty well. But interestingly enough, like the market's being led today by its Mag 7. I mean, take a look at Mags. Nvidia's up 3%. That's big enough to drag the entire market up with it, and it is. Because here's your Mags up a little bit. So Apple is down, Amazon down, Broadcom up, Meta barely up, Microsoft, big comeback in Microsoft. What was Microsoft last week? We were down to 392. Wow. And my only hesitation on Microsoft is I don't know if the market's trying to treat this like a software company or like an AI company. But either way, it's like if I'm going to go Microsoft, I think I want to go like 220. Let me see what a Project Options Edge trade looks like here. Microsoft. I don't think I have any exposure in this right now. VIX is gapped up to 21.5. What? No, that's not right. No way. I mean, it's trading at 17 right now. That's live VIX. I mean, we had a VIX around 19 this morning, but yeah, it's 17 to change. Yeah. So the iron fly, if price comes back down, okay, if price comes back down to like 45, okay, it comes back to 40. I'm going to set a chart alarm here at 40. If we come back to 40, we're probably going to be staring at a couple bucks. 69.40. If it creeps higher, then I'm hoping that if we're going to creep higher, you might as well go to 7,000. We'll see what happens. Yeah, I'm not sure where you're seeing that mark. I don't see that gap at all. I mean, are you looking back at a previous day? Like, I don't see any gap at 21. That's way up here, man. You're talking this gap? All gaps on VIX fill. I mean, yeah, but when? I mean, they fill the one time you have a VIX run. Like, okay, the VIX went from 17 to 30. Well, it's going to fill that gap, but who knows when it's going to fill? So you can't bank on like it's going to fill that gap. It's like timing the VIX is extremely difficult. XSP, are you posting anything instead of the? I mean, I've got participation, break even, defense, defense. I have 4 trades running on engineered options, right, Patrick? So I've got pending orders in right now. Okay. So we're at 60. I've got a chart alarm set at 40, chart alarm back to 25, and then up here near 80 plus. So if this chart alarm activates, then I'll be looking at maybe my profit trap. If we come back down here and activate this chart alarm, then there's my iron fly. And that's kind of centered for the day. And hopefully we're right. Right. That's why they're pending good till cancel at 50 cents. I'm not taking the trades. And I mean, they fill. If you've been in engineered options, we put pending orders in, they get filled, and they've been paying us. So it's just setting the credit ahead of time where I don't want to settle for more risk than reward. I want it to be 1-to-1. Okay. All right. Any questions on how the day is going to unfold? Like, I don't know what's going to happen. If we, come back for a big kind of centered day, then our iron fly will be fantastic. And I'll look at, maybe making $300 to $500, and then my defense trade, I lose $50. I make money on the day. I'm happy with that. Okay. If price is going to drift higher, well, there's obviously risk if it doesn't go high enough. Let's say we just hang out here at 70 or 80. Well, then I can lose here and have defense that doesn't really help me. Like that's still weakness. That's fine. Like I accept that for what it is, given kind of the gamma profile right now. It's like if we're gonna move, we might as well move to 7,000, 70.15 and see if these levels are attractive enough for price to get there. If they're not, then maybe this kind of sets back into center. So that's how I'm going to play it. Okay. Randy says 30-20 on the iron fly. I mean, that's a lot more credit, so it's a lot less risk, but those center prices are pretty terrible, Randy. I mean, an iron fly right now would be kind of more attractive to be at the center price of like, hey, you know what? Look at like a 50. If you looked at an iron fly now, I mean, I'd say, well, maybe we can stay, let's get here. Maybe we can stay at 69.50 area. So if I did 69.50 and went, 30 wide, so that's a 30 wide, there's a 30 wide. I mean, it's similar risk reward. It's actually slightly unfavorable. If I spaced it out this way. So that's 30 wide, 30 wide. Let me see. I'll just get a different account. Give me a second. Yeah, I mean, it's still risking like 1,000 to make 1,500. Yeah, I would just say don't chase it. The reason I did the iron fly is we started out gap down, chop, chop, chop. So I threw the iron fly in, and that's it. Like I don't need to go excessive risk and put in, here's an iron fly and then put another iron fly and then another iron fly. It's like those are fine if the market stays contained. That's just throwing on excessive risk. If the market's going to go and find gamma up to the top, I might as well just have a cheap defense trade. So like I said, for the rest of the day, if price wants to work up to the 7,000 gamma, that's awesome. That's great because our defense trade can be a huge profit potential. $1,900 up here. If markets are going to do a little bit of up, come back down to maybe center, that's fine. I want to see if price at all comes back to like neutral today. If it's at all neutral today, that's good for us. Okay. Let's see here. Iron Condor open for 240, closed at 20 cents. That's good. Where'd you get in on that, Finn? Like 240, like where were your strikes? I mean, if you got in right away, and had a bear call, bull put, and it's been a slow grind, then sure, that's pretty easy profit. So anyway, any questions on this for the day? So if we have market essentially is neutral within 5 points, 10 points. There's some good profit there on the iron fly. Cheap defense. If we're going to find gammas at 7,000, 7005, 7010. If these are magnetic enough to get price to get drawn to them to the day or for the day, then that defense trade is pretty awesome. It's cheap enough. So I'm always curious where this market's going to be. I wish I always knew where it would be, and nobody does. So there's my cheap put fly. I could maybe overlap this a little bit, like 65, 85. This wouldn't be terrible. So, 1,500 bucks, like risking 5 to make 1,500, that's certainly not bad. But it's more expensive that way. Like that's a lot of risk, right? But if price is going to hang out here, like 85, I don't know. Try to make this like somewhat cost effective. 90, 10, maybe an overlap here. Like $4 to make 1,600. Not a bad trade. There's still risk, right? Like there's still risk. So if price is going to be up directionally, then this wouldn't be a terrible spot to have it. So I've got to be confident. I mean, this isn't terribly expensive. It's risking 440. That's a pretty standard daily profit play. But I got a profit trap up there like 1,500 bucks. Choices. 90, it's kind of cheap. I can make this a little cheaper. Risking 240. But I think I'm making a profit trap. 20 is decent. Like I risk 400 bucks. If we're going to hang out towards like 90, 69, 95, 7,000. There's a decent overlap. All right. I'm going to throw in one more trade. It's traded for 420. 420 debit, 415 debit. See if we get filled here. I'm going to throw a couple more bucks at it today. Make sure there's no overlap in strikes. There's not. Filled at 420. Okay. So 2015. Take this down to 1515. So adding one more trade. I guess technically it's another defense trade. 2-9 expiration. This one is filled. It's a call fly. Buying the 6970. 6990 and 7010. That's 420 debit. It's my max risk up to 1580 max profit at the 6990 pin. Okay. So take a screenshot of this. If you want the trade. You're all welcome to have it. So iron fly, if price is centered, defense, if we're going to find those 7,000 gammas, and then if we're just already moving up and we kind of flirt with like 85, 90, 95, we kind of hang out of that like magnetic 7,000. This one also has a profit trap. Okay. So if we're just going to have like this slow grind for the day, anything above like 85 to 7,000, this actually might as well, at this point, either we're going to come back here and we can be happy with the iron fly, or we might as well cheer the market on to the upside and get up into these gamma levels and have two profit traps up here to show for it. So this trade, potentially, $1,000+ on the table if we have good defense. This one's $1,000+ easy for defense. This one I'm risking 1,000 if I'm dead wrong in the center price. So I'm pretty comfortable with that. Like we've got two high reward, low risk trades, and then one that's based on efficiency. It's a 2-to-1, but if I'm wrong, I'm still wrong. So I have to accept the risk. But what could be kind of nice is if we have the overlap between these two defense trades. The overlap here could pay us up to 19 and 15. We could get $3,000 up to profit traps today. So let me take a look. So I'm just going to go 2, 3. This will be DPP defense. All right. So when I come up here and spot check my prices for the day, I've got my iron fly, max risk at 985, defense. I'm just going to let those marinate. If these two trades at any point are offering more profit than my risk on the iron fly and I'm net profitable, I'm going to try to look to protect it. When do we bail? So I'm not on an iron condor there, Rommel. I'm on it's an iron fly because I'm selling the body and I'm buying the wings. So anyway, I mean, right now it's down $680. My max risk is 9 and change. I can accept the other $300 of risk, but if I take the loss now and bail on it, there's no chance that that's profitable. And again, not that it looks profitable at all. I'm just like right now, does this look profitable? No, not even close. But if price, for whatever reason, hits a gamma level, comes back to recenter on the day, that's a big fat profit trap. Okay. So here's what I'm gonna do. I think I need to go downstairs. I think it's go time for me. Let me check the schedule. I think we're starting now. Yeah, I'm pretty sure I have to head downstairs here in a couple minutes. So I'm just going to keep this workstation up here. This is too much of a pain to lug this stuff back and forth. And since I have all my trading stuff up here already. 69.55. What do I have? So I have a 20 by 55 on the iron fly. You're saying on Telegram? $20 and $55, 25 and 90. That's right. It's 35 wide on the iron fly. So 20 and 55, that's correct. And then 25 and 90. Yeah, it's 35 wide on the iron fly. Oh, I see. Tech stock. You are correct. 55. Thank you. Okay. So iron fly, defense, defense. I accept. I can walk away. I don't want to be late to the session. Waterfall income. Yes, that's correct. No live session. No live session, but let me look at a trade really quickly on. I'll do this. Give me, so we have a lunch break, I think at noonish. Let me just get a trade posted for Waterfall when I'm on the lunch break. We're going downstairs for like an hour and 15. That's my first segment. When we have our lunch break, I'll come up here, I'll post a trade, do a quick alert, no live session. But give me like a 2-hour window and I'll post an alert for Waterfall income. That way I can at least come in and spot check things and see how we're looking for the day. So I'll wrap it up here for today's session. That's it. Like, let's see what the day gives us. If we have some cooperation to the upside, we might as well cheer on 7,000. I mean, we have a ton of profit potential up here at 7,000. If we come back to center, we have a ton of profit potential there too. I can make $1,500. So I'm just trying to stay out of the way. Give me a couple bucks today. Let's see if we can have markets be centered or creep up to these defense trades level and get to the round number at 7,000. So the good thing is we've got way more profit potential than we have on risk today. So I'm gonna let that marinate, and I'll come back in and check. So all right, I'm gonna run. Be back in a little bit. Not live, just spot checking. So all right, talk to you soon, everybody. Thanks. Bye.
All right, folks. Chris seems to be out of here. You'll have to forgive me. Gosh dang, my camera is doing that thing again where it just keeps turning itself off. Okay, so as you guys know, my wife is about 9 months pregnant. Next week, she's going to be like 40 weeks. So sometimes I'm not always here in the morning because I'm hanging out with her. And she really needs me in these current times that we're in. But there's a stream. What was the debit on the last trade? I'd have to look on Chris's Telegram. Please share the link for VIP members to join Chris on his meeting. So that is a link that you should have in your inbox or in your members area of some kind. I do not have that link, unfortunately. Dave Pillsbury said it was a $4.35 debit, $4.35 debit on the last trade. So I'm not really sure what the heck's going on today. The market's absolutely on a tear, though. So do with that information what you will. But we have a little stream that we're going to play because there's a lot of people. Actually, they probably maybe already all gone by now. That are not in the daily profit play. So for those of you that maybe are still here and are like, well, where the heck are people getting these trades? Where are they coming from? You know, where is Chris posting these trades? This is for you. This is where you can figure out where you can get the trades. And maybe I'm strong. I'm looking on my calendar, my handy dandy calendar that I have here for the company, and I don't see nothing. Now there is a live event down in Jacksonville. Once again, I'm not in Jacksonville. I'm in Kansas City. I host webinars, so I have no idea if there is a special stream that Chris is doing, a special show. I don't know. It's not my area of expertise. I would say, though, if you're a VIP member, check your email. You'll probably get a notice in there of some kind. If anything, maybe check your Telegram as well. But I don't know why I would post it in there because that could be for anybody. So you probably got a special link to your email of some kind since you're a VIP member. But anyways, I'm going to answer the rest of the questions in the chat. I'm going to let this stream roll right here, and we'll keep it going.
All right. So quick reminder, we're developing tools and strategies to the best of our ability. No one can guarantee the future. Certainly, there's no crystal ball in trading. There's always risk.
But we're talking, live trading published alerts since August of 2024 all the way to present. Win rate's been over 89%. We're at 89.3, and the average return of 14.3% and a one-day hold time, meaning we just take the trade for the day and hold it for the day. It's a 0-day expiration. Okay, there will be losing trades. Look, even though I win, almost 90%, I still don't win all of them. So, daily profit play is, and anyone that's in my daily profit play segments, by the way, or in my class, in my master classes, how specific and how refined have we become over the last year and a half of this service? Pretty refined. I mean, we've spent a lot of time together. I would say we probably had 10 plus master classes in the last year, and we just keep getting it better and more refined. And I'm not saying refined to cherry pick and optimize. I'm saying we are making good decisions to address, let's increase our probability of profit. Let's not accept more risk. Let's set our trades where we know exactly what our reward and risk is. Okay. So to me, this is probably the most it's the most active class because we do it every single day, but that also means that we have hundreds and hundreds of opportunities to trade. And if you are learning options, to me, this is probably the fast track to trading options because you get a rep almost every single day. And, a chance to really see from start to finish how an option trade plays out from start to finish. And that's really good. Okay. I'll show that. Let me get to the end here, Doug. That's a good question. Doug says, where are your favorite strategies? Actually, let me do this. I'm going to put a pause in this for 1 second, and I'll show you. I did this graph here. So these are where all my strategies are. Okay. This is the 4 quadrants of trading, which means you can make money here, you can make money here, you can make money here, and you don't make money here. Notice where all my services are. None of them are here. Okay, so daily profit play. We win about 90% of our trades. Waterfall income, 94+% of our trades. Project options edge, 97% of our trades. But my risk is typically higher on those trades. Not by a ton, but higher. I'm risking $4 to make $1. I'm risking, $9 to make $1 to $2. I'm making, same thing, $4 to make $1, $9 to make $1 or $2. Okay, pinch point. We're winning about 85% of our trades on pinch point. Newsbreakers around 71%. Engineered options around 70%. This is a 1-to-1. Newsbreakers has potential. It's like an all or nothing. It's earnings primarily. So, we could have a 2-to-1 reward to risk on newsbreakers. And we're winning 70%, so it pays well. 1-to-1 engineered options. This is just relying on the market's ability to break even or better. And it does that so many times. It's our house edge is with good alignments, good confirmations. Our house edge is be bullish. Okay. And that participation for, a dozen years has proven to be fantastic. And it doesn't require the market to do anything other than what it's capable of doing, which is just grind higher. Double ups. This is a high reward. You can see where it is on this graph here. This is a high reward, lower risk setup. I'm only winning about 59% of my trades here. It's one of my lowest win percentages, but my average winner is 1.5 to 2 times. So winning 60% of my trades and making double the money on reward to risk, that tends to work out pretty well. Okay, crash course is my hedges are 20-to-1 or they're 30-to-1. So I don't have to win very often. My win percentage is absolute garbage. I might win 10% of my trades, 20% of my trades, but my payoff here, it still makes me money because my reward is so high. In fact, this should be way over here. It's off the chart reward to risk because it's so asymmetric. That's what a hedge is. So I don't have a favorite anything. Everyone asks me what's your favorite strategy? I don't have a favorite strategy. This is the way that I get the job done. This kind of puts together my whatever it takes approach, which is I will trade whatever I need to trade to be profitable. Does that make sense? All right. Let's go back to this. Okay. So, number one day trading strategy for 2026. As far as I know, I'm the only person that's trading this in the company. There was an entire, this has existed for 50 plus years. This strategy, the concept here has existed for over 50 years. I've traded it for a long time, but we never were allowed the opportunity to do it on a day-to-day basis until 2022 because of the update, I would say, to the markets giving us 0-day expirations, right? So 952 traders, almost at 1,000 members in the service, using targeting daily income from the stock market. Just last year alone, 362 day trades with an accuracy of 89%. You go back into August when we launched this thing in 2024, we have 493 winners, still at 89+%. So on average, that's more than one winning position per day over the last year. And anyone who took these trades with us racked up a total profit. That's with winners and losses of over 60K. And here's the cool part. The type of strategy is not connected to any sort of market pattern. It doesn't require us to flip through dozens of different charts, and it doesn't demand any technical know-how. Okay, this is a bit of a it's a fast track course, meaning like there's a lot to take in up front. But if you sit through a masterclass with me or two, and you understand the core strategy and the mechanics of what we do, it makes perfect sense. Because what we are doing is we are siding with market makers. So all we have to do is really activate the trade in the morning and let price do its thing. Let the market take a few points in either direction. And typically, and this is what we normally see, as nothing crazy happens, we typically see our daily profit play hit. We're looking at like $100 target or so in the first 90 minutes of trading. Okay, so I mean, I understand it sounds a little crazy, and sometimes the webinar makes it seem really simplistic, but it can be. It should be. I want it to be. Nothing in trading should be hard. So look at the trade from August 14th. We set the trade up, positions up around 9:35 a.m. Spend the next 90 minutes at the gym. A lot of traders do this where they get the alerts and they set it up in the morning and they walk away. You can set the trade up. You can put in the take profit with your broker and let them automatically close you out. And there's where you come back to see $160 in your account. How about the next day, Friday, August 15th? Popped into the trade around 9:35, hit the trails for a quick ride. Came back 90 minutes later, see an extra $112 sitting in their account. Monday the 18th. Anyone who leverages this unique trade could have set it up around 9:35. Meet some friends for a hike, or go, maybe shovel some snow together is what everyone's doing right now. Come back and see an extra $250 just an hour later. So in 3 trading days, that's a total of $512 over the course of those 3 trades. Again, that's, you're risking $1,000 a day. I get it. So you can scale that down. If you want to risk less, then you scale that, but it's scalable to the downside, scalable to the upside. Keep in mind, these trades did not come from a back test. They were not pulled from a study. These are real trades that I found and I traded and shared with hundreds of my followers. In fact, for the last 17 months, I posted over 490 of these daily payouts. July 7th, popped in the trade, spent the morning on the range, came back 90 minutes later for $149 in your account. Winner. How about the 21st? Set up the trade around 9:35. Do whatever you want to do. Enjoy the freedom that you have when it's like, look, I just trade. Set the trade up, set the take profit. Your work is done. Come back 90 minutes later to an automatic $298 of trading profits. We didn't have the timer entry. We didn't have the timer exit. We didn't even have to close the trade manually. Our returns were deposited in our account automatically. And I will admit that something like this is, something like this shouldn't be possible, but it's all thanks to a unique anomaly hidden inside the options market that allows us to target $100 or more each and every day. Now, I want to assure you that this is not a silly gimmick. Okay. This anomaly has been studied by Columbia Law, University of Syracuse, and even the Fed. Okay. These are brilliant economic minds with the efficiencies of the market, that this is a market phenomenon that I have loved for the last 20 plus years I've been in the market. Certainly more fascinated by it the last 10 years when I've been heavily trading options for income. So most folks don't know how to leverage it, but today that all changes because we'll share the secret behind the daily profit strategy, and I'll even show you how to set it up tomorrow. We'll do this every single day in my daily profit play like we do, and we're looking to target hopefully $100 or more based on that $1,000 stake. But not just that. I'll show you how to scale these trades so you can scale in for less or more. I have traders that certainly have made this their bread and butter that are risking far more than I do. $200 a day profits, $500 a day profits, even thousands of dollars per day, like a lot of my current students are doing. So that sounds exciting. I'd like to welcome you to Daily Profit Play. This is like one of my breakthrough courses that I started out with Prosperity Pub. And it's amazing to see the evolution of the members that I've had. I have traders that exclusively do daily profit play, and they do it because they know the routine, they know the process, they can do it every single day, and they manage risk, and it makes them money. They trade through, they stick to the process, and it works. So if this is your first live event with me, hopefully you know who I am by now, trading with me every single day. My name is Chris Pulver, Senior Option Strategist here at Prosperity Pub. Former hedge fund manager, managed a multi-million-dollar book on behalf of private clients. I still do. Today, I'm actively managing my funds up to about $5.3 million on behalf of friends and family. I've traded through the dot-com bubble, the housing bubble, the great financial crisis, Brexit, ran a currency fund, traded through the pandemic in 2020, the 2022 bear market, the trade war in 2025, and even whatever we're going to see now, right? Whatever this next gold and silver bubble, the next fourth turning, the next recession, whatever, I'll be trading through it. Okay. But since joining Prosperity Pub, I've posted more than 490 winners with an accuracy greater than 89%. So on average, that is one winning trade per day for the last year. Now, unlike most trading strategies, the daily profit play is not dependent on market direction. The market can actually go higher, it can go lower, it can even stay dead flat. Yet each scenario offers the chance to collect $100 or more within the first typically 90 minutes of the day. And here's why I'm here today. I'm going to hand you the complete profit play strategy to show you how to implement this tomorrow morning live in my member service. All you need is a regular brokerage account and permission trade options in just a few minutes to set up the trade. Now, before we get too far along, I'm going to be very clear with everybody. Today, you're going to see a lot of winning trades. This is what my traders are accustomed to with daily profit play. We take a lot of trades. We win a lot of trades. Okay. And as I mentioned, we've closed over 490 trades since August 2024 with an 89.3% accuracy. But that does not mean that losses won't happen. In fact, they will, and they have. So it's not perfect, but you trade through it. Okay. If the market does something very out of the ordinary, it's possible to lose. And this is what is one of my favorite things about this entire strategy. The only way we typically lose is when the market does something silly for the day. The expected move was, 30 points and the market went up 60. Well, that's kind of out of the ordinary, right? Market maker move was 40 points and the market went up 100 points or down 100 points. Out of the ordinary. So those days happen, but usually we don't see it happen very often in a row. So we do kind of stack the odds and probabilities in our favor because the market is not inefficient for very long. So if you decide to trade this tomorrow morning, this is the most important thing. It is all about risk management. So do not over leverage yourself. And finding success in the stock market is not about closing one big trade every once in a while. I think the thing to do this for real and to do this where you survive the markets on a day in, day out basis, survive the markets year after year, is by doing one thing consistently and watching the results compound. That's what daily profit play aims to do. So it's a basic trade that anyone can implement any day of the week, right? Doesn't matter if we're in a bull market. Truly, if we're in a bull market, great. If we're in a bear market, doesn't matter. Still works. If we're in a recession or expansion, still works. Market makers still have to do their job. It's about market efficiency. So we do a set position up, hopefully around 9:35 in the morning, let the market take a few points in either direction. As long as nothing extreme happens, as long as there's no crazy outlier type move, or the market was silly for the day, we should see $100 or more hit our target or hit our account in the next 90 minutes or so. It's been proven to work even in the best of times. And more importantly, I think this is great, even the worst of times. So whatever the market throws at us, we'll be fine. I want you to know that. Like, markets can have bad days, but markets don't have, majority of bad days. Markets are still very efficient. Okay, that's not exaggeration. For example, let's jump back to March. This would have been 2025, right? One of the worst stretches we've seen since the pandemic. The market lost $11 trillion in market cap in 33 days of trading. That's crazy, $11 trillion. Now, that was one of the most aggressive downturns in the market history. Pretty crazy there. According to the average 401k from Fidelity, the average 401k was down over $127,000 in drawdown. Now, if you're trading options, good luck, obviously, because if you're long anything, you're likely going to lose, right? Every call option would have been pretty much worthless through that month of March. But $1,000 into every daily profit play would have posted a very different outcome. In fact, for the month of March, the entire candle was red for the month, by the way. And we did a streak here. We went 42-4. We had 42 winning trades and 4 losses. We made money during one of the nastiest, 7-8% drawdowns. April was down over 15%. We still made money. Right? 91% win rate during one of the worst months of the year. Now, for the sake of time, I'm not going to walk through all 40 plus trades, but some of the best ones include a $333 return on March 3rd, $290 here on March 4th, $183 on March 5th, $101 on March 6th, $136, $149, $162, $273, $162, $212, $169 on the 31st. Now, keep in mind, there's another 29 additional winners I didn't even mention, but that's a lot of chop. And look, the market's actually going down, and we still made money. Okay, so anyone who took the trade with us, if it was a starting stake of $1,000, would have walked away with $6,700 in profit, and that includes winners and losers, by the way. Okay, and it's not even the best part. So I don't keep these trades myself, right? This is with my daily profit play service. I share them with hundreds of students each and every morning. In fact, some of my top traders here, here's Larry up 67K. I just had a one-on-one with Larry last week, and Larry's crushing it for 2026. I'm super, super happy for him. anyway, I mean, this is what Larry posted and gave me a testimony to use. Just in a 90-day window, Larry's up $67,000. Okay, now I know that's an incredible return, and for some folks, 67K in 90 days, that's life changing, right? It's like, oh my gosh, trading is the real deal. But here's what's cool: you don't need a six-figure account to target daily profit plays. You don't need decades of trading experience, and you don't need to guess which direction the market's going to go. There you go. Larry just posted right there for everyone. 210K this year, just on daily profit play. Like Larry has a large account, but he knows the process. And we talked last week, and so to make sure like he's comfortable with the process, which he is. So with even just a small trading account, we can still target $100 or more each and every morning. And in time, we have the chance to scale that to about $200 a day, or $500 a day, or even $1,000+ a day. And when compared to your typical trading strategies, it can be and should be a lot less stressful. We don't have to time the entry. We don't have to fight against time decay. We don't even have to close the trade manually. As long as the market ticks a few points in either direction, we should see a daily profit play hit usually within about 90 minutes or so. Okay, and that's really why I'm here today. Traditional trading can be really hard. Too many variables you have to get right. You have to time the entry, you have to time the exit, you have to get the direction right. But with this new type of trade, you don't have to worry about any of that. So I'll explain just why in a second. This is why we've closed out 490 plus trades. I know it says 450 there, but we've won. I'm going to put this for 490 because it is 490. 490 plus trades. There we go. All we have to do is set up the trade by 9:35 and let the market take care of the rest. Let's jump back to the middle of May. Now, after March's $11 trillion bloodbath, the markets were pretty rattled and kind of recovering. Obviously, we had a lot of volatility with Liberation Day and post-Liberation Day. It's a good time to buy, says Trump on Truth Social. And the market had 3, 4, 5% gaps up and pullbacks, and the VIX went from 60 all the way to 17. But all the news surrounding the trade war created a stretch of very volatile days, and most traders typically get beat up in this volatility. They lose a ton. They don't know what to do. They panic. They get out of their positions. But with our trade, it's just one trade. It's just one day. It didn't matter that much. So the market can tick higher. The market can tick lower. It can even chop sideways. But each scenario offered a chance to collect $100 or more within the first 90 minutes of the opening bell. So take a look at what happened here May 20th. Despite it being a choppy day, the market finished slightly lower. So that's the entire day of trading, and it just finished slightly lower. Typically, directional traders avoid the downward chop or lose, but the daily profit play didn't matter because as long as the trade was set up in the morning, we hit our daily profit play. That would about 90 minutes later, $164 in our account with a $1,000 trade. Not bad at all. Let's jump to the next day. The market opened flat for the day, but eventually closed in the red. Okay. Now, if you're directionally long that day, you're going to post a loss. But for our trade, anyone's in and out with us in the morning, we're up $111. Okay. How about the next day, June 22nd? The market drifted sideways all day, finished slightly higher. Okay. Now, if you're right on direction, you're long that day, typically time decay is going to eat into your returns. But with our daily profit play, we don't have to worry about that. So even the market finishing flat for the day, we still make money. In fact, our traders saw an extra $342 hit their account within 90 minutes of opening bell. Okay, how about the next day, June 23rd? Same story. $104 here within 90 minutes of the open. Let's look at one more together. In this case, the market sold off and finished 53 points lower. If you're long options, you're getting smoked. But with daily profit play, we would have seen an extra $234 hit their account well before lunch hour. Okay, we don't have to be in these trades very long. Brokers and efficiencies do the job. So despite the market posting 5 different outcomes, up, down, sideways, high, low volatility, our trades posted 5 winners in 5 different outcomes. So anyone who started the week with just $1,000 would have nearly doubled it. Okay, you're looking at $955 just after those 5 quick trades. Now, if you double your starting stake, you're looking at $1,910 for the week, almost $2,000. Okay, now I don't want this to sound cheesy, but an extra $1,900 right after a couple days of trading. Let's say we trade 5 times, we have $1,900 in our profit. That's great. Feels pretty nice. But that's money that could be used for whatever you need it to be. Whether it's happy hour with friends, a weekend getaway, a round of golf, mortgage payment, next Amazon purchase. It's I say this a lot. It's like I think there's no better time to be a trader, and I think that trading is the ultimate side hustle. Okay, we don't have to put in the extra hours. We just have to trade smarter. We know what the market's capable of. We know the efficiencies. We bank on that efficiency, and we trade it. That's it. Okay, so don't treat it other than it's a side hustle, but it's the greatest side hustle in the world. It's recession proof, right? You're worried about your jobs and skill set when AI comes for trade the markets. So the daily profit was designed to kind of work in tandem with your life, not alter it. So if you have a day job, don't quit. If you're saving retirement, don't stop. It's not what this strategy is about. It's about using a small portion of our current investments to target a daily profit each morning. Does it make you a millionaire overnight? Probably not. Okay. But it's helpful. I mean, is it going to allow you to retire tomorrow in one trade? No, certainly not. The goal is let's do something we can do consistently. Let's target $100 or more each morning in hopes to make life just a little bit easier. You'd be amazed how quickly, $50 a day adds up, how quickly $100 a day adds up. It's a lot. It does. It adds up really fast. Okay. Now, if you want to target more or less, you absolutely can. You can scale this up or down. A lot of our top traders, all ages, all skill levels, and all account sizes are following the daily profit play. So here's Jim, 26, 2-1, right? Averaging about $100 a day. Awesome. So right there, it's just right there. Jim's probably up over a couple $1,000 just on that series. Okay. Here's Rosin up $200 a day. Here's Matt up, did $440 in one day. Okay. We have guys like William who's pulling in more than $1,000 per day. And again, just like he has here in